I had screen recorded it, but it didn't capture none of the audio. See what I'm saying? So I'm just gonna go over briefly what was happening now on this is VTI. I believe this is the should be the minute chart. I don't know. Oh, it's the hour chart. It's the hour chart. See, I got my RSI up there. I got my MACD up there. But also, you see all these lines. I know they're confusing you. I'm sorry. In my Discord, I was showing people the higher highs and the lower highs, because right now we're on a downtrend. We're probably gonna make a higher low in the downtrend, but we're still on the downtrend nonetheless, because I use VTI, but I watch VTI mainly, and I do all my technical analysis on VTI, but I keep all of my stocks side by side. Okay, so when I'm in my watch list, they're all close to each other, because when they move, they kind of move in the same pattern. You feel me? And so I use that to signify what the entire market is doing, because usually the other stocks will move the same way in this market that we're in right now. So the max. Now let me rephrase this again. Do not get confused by all these lines. Okay, I know they're all over the place. But I was trying to clear them out from my seminar. But we're in that channel at the bottom. I ain't even gonna try to explain that. But so what's going on in this, and what you're seeing here, is that VTI maxed out at about 245. Okay, we ain't been up to 245 since we touched it. So we've been on a downtrend ever since we hit 245. Now, after that downtrend, that was the high. Okay, now after that high came a lower low, which came 210. So 210 was the bottom, the temporary bottom, which was the lower low from that high. Then it created a higher low of 233. So it went from about 243 to 233 in higher lows. But when it went to the low was 210. Okay? So then after the lower low of 210, it went up to 233, and it went down to 190. Now, we ain't been down to 190 since we hit that mark, okay? So right now we in a whole different little trend. This is a little macro trend. If you look at the bottom, you can see the little channel with the green line on the bottom. That's the buy line, and the red line on top of it, that's the resistance line that we're in a channel right now. So if you can see that, that's what we should be focusing on. But I got all these other lines distracting you and all this other stuff. I know. So 243 was our high. Then we went down to 210, which was our lower low. Then we went up to 233, which was our higher low. Then we went down to 190, which was our lower low. And now we're finna establish a higher low if the market continues in this pattern. Okay, so the pattern from 243 to 233 is $10. So I'm making the interpretation. I've already told my Discord this, and I've explained to them why I'm making this interpretation. I'm expecting VTI to get to 223 before, or around that range, before it makes another lower low. Okay, and I'm saying this because if it stays in this pattern that it's been doing, then this is what is going to happen based on just my technical analysis, okay? And from my technical analysis, if it takes a month for it to bounce, if it takes a month for it to get to 223, I can be using call options to make money that whole way up. And then when it comes down to make another lower low, I can be using put options to make money on the whole way down, okay? You know, I get real surgical with this. You know what I'm saying? I get real surgical. So, yeah, you see my RSI down there. If you look at the RSI, that's one of the indicators I use. The 70, if it gets up to 70, that's the upper band. That's overbought. So if the RSI gets to about 70, you can expect some selling to occur. But the indicators they're just indicators. They're not the end all be all of nothing. So you have to really use You just have to be paying attention and really just watching the market, because it can be overbought and the stock is still, the RSI is still stay up to 70 and people won't sell it. It won't experience no massive selling. Which, if you look at the RSI, you see when it gets to 70, it's oversold, and when it gets to 30, that means it's no. When it gets to 70, it's overbought, and when it gets to 30, it's oversold. Okay, so when it gets to 30, that means it's gonna bounce. Hence why you see it when it gets to that green line. I made it green. It bounces up, and when it gets to that red line for you to sell, we sell the tips and we buy the dips. When it gets to that red line, when it gets to sell, you see how it falls, the RSI. Then you got the MACD down there, which shows you the selling pressure and the buying pressure. And you see how those go up and down as well. Okay. But when the MACD stays, when it stays like in the middle, that's called consolidation. Okay. When you really don't want to buy no options you don't want to buy no calls or puts on a consolidating day. Not no weeklies. Okay. Because the delta will eat your contracts very quickly. I will explain delta. I will explain delta to you guys and all the Greeks. But you do not want to sell no weekly contracts. Damn, what was I gonna say? Damn, what was I gonna say? I forgot. But just remember, the delta eats your contracts. Okay, remember that. So you don't want to say. Damn, what was I gonna say, man? Anyways, what are we looking at right here? So, yeah. So we see that VTI is trading inside that channel. Let's see here. Let's see what happens. I think sometimes we were setting. That's the channel right there. So VTI, see how it's trading this channel, is staying within. And it resets itself again. Sometimes technology is great and all, but when it don't work, it just don't work. That's the most annoying thing about technology. I've always hated that about computers since I was a kid. You can have one of the best computers, but once that mug start lagging and glitching, man, you can't do nothing to fix it. It's like the dumbest thing. Like, it's just, man, But yeah, you see the channel right there. I'm trying to remember what I was trying to say about options and weekly options in the delta. The delta is very high on weekly options, though. Oh, yeah, I was saying that if you buy at a further out expiration date, then the delta ain't gonna eat it as much. So you can, you know what I'm saying, you can hold it for longer span of time. But when you get into, oh, I was talking about the consolidation. Yes, okay. So when that's you see consolidation right there at the end. At the end where it's just staying stagnant. It's not going up. It's not going down. You don't want to buy options in that area, because in the weekly options, you could buy an option that's years out, or this will be like a year or two, or that's some months out. But you don't want to buy no weekly while the stock is doing that, because your contract is losing value by if it's on a Thursday or Friday and it's a weekly, man, your contract is, and it's not in the money, your contract is going to disappear. Okay, this video starts with me showing you how I watch the market. So what I like to do is I like to put all the ETFs together, since the ETFs show you what the ETF is. Let's talk about the SPY. That's at the top. SPY, S&P 500 has 500 stocks inside of it. So when you buy the SPY, when you put money in the SPY, it's like you're buying you're buying all of the 500 stocks that they own. You get a piece of all that, so you're diversifying your portfolio. ETFs are the safest investment because they're, like I said, they're diversified, and if the stock market's coming down, the ETF's going to come down probably like 1-2%. Let's say 5%. That's a bad day. That's a bad day for the market. If an ETF comes down 5%, a stock will come down 20%, 30%, 40%. way before ETF comes down 5%. You see what I'm saying? So the ETFs are way more. They're safer. They're safer investments for you. And I put all my ETFs together when I'm trading. That's just how I leave them. I look at them all together to see, because they'll show you they all almost look the same exact way during the day, and that's my indicator to what the market is doing. So if I see that all the ETFs are going one way, oh, I know the stocks is doing this. If I see the ETFs going upwards, I know the stocks is going up. Okay, so that's how I watch for market movement. Then I find the individual stock that I want to do a trade on, and I go in. I go in. So that's this part. Let's see if I can speed it up. Right here, I'm looking at Neo, and when you're a teacher, you're still a student, right? So recently, I had learned that you're supposed to let the candle, close, like finish, all the way before you get into a trade. So I'm being patient right here. I'm looking at what's going on, because if I would have bought that green candle right there, right to the left of that red one, and thinking that things was going to still go up, man, I would be ooh-wee. I would be sad. Well, I wouldn't be, because I know how to maneuver throughout the stock market and make money in and out. But I would have been down right there. It's another example. Look at how it's going up. You gotta wait and be patient. So, another thing I was talking about is that green line. It's a green line. You see the red one, the orange one, the yellow one, and the green one. So I use the green one for day trading for sure. When I'm on the minute chart and I'm day trading, I use the minute chart. Now when you trading, you get used to whatever you use. This is my trading setup. This is all the stuff I got used to and I'm successful with. I'm 100% positive that there's other ways to do it, but you want to go with what works, okay? You want to go with what works, and if you find a different trading strategy that works, you should use it. Don't just go off on a limb trying to do your own thing, and because you're not gonna be successful until you learn what you're doing. So I use that green line. Now you see how it's coming. The stock is coming down to the green line. This is what I use as my day trading. It's one of my things I use as a day trading signal. Okay, so what happens is, if the stock can stay above the green line and the green line is ascending, I know that my call option is going to print. You know what I'm saying? If the green line is descending and the stock is falling, see how it's going below the green line right there? This is when I'm finna look for a put. This is when I go in. So I bought the put. It broke that green line. Okay. Broke the green line. Now my best bet, I should have waited till the candle closed, but seeing it go down through the green line, I'm checking the market. Well, seeing it go through the green line, I already knew that. I just had a feeling. I took the risk. You feel me? No risk, no reward. That's all I can say about it. I took the risk. It went through the green line. We see it's a little bit of selling right here, and even my risk, I put down a $93. I put down $93 on the put option, so that's my risk. I'm risking $93. Really, that's not my risk, because I can put a stop loss on it for 10%, and if it loses 10% of 90, is $9. So if I lose $9, it will just kick me out. So I risked 90. I put down 90, but I risked $10 to make an infinite. This is a put, so this wouldn't be an infinite amount of money. It'll just be until Neo goes to zero. But if it was a call, it'll be an infinite amount of money. So you see, I'm being still skinned. I'm not getting out just because I see that the stock is going up. I'm checking it. I'm down $1. So what? You know what I'm saying? This is the options game. You go down a lot of percentages and you go up a lot of percentages. Okay? but you have to know how to maneuver. Now, when the time comes, if I ever go down 50% in something that I feel like it's going to jump, I will show you. I will show you exactly what I would do to make money with that. But you have to have extra capital. That's why I'm only risking in this trade. I only risked $93, but I have $900 in buying power on this account. Okay, so you see this ascending line. Now, if I was to buy a call, and let's say that the stock kept touching that green line and it's ascending, if I buy a call, then I automatically know that that call is going to make money for me throughout the day if the stock continues on that pattern. All right, that's that's how I use the 9 EMA. So right now it's ascending, so I would use it for the calls, and if it's below it, and if it was above it, I would still use it. I just use that green line right there for this trading strategy right here. I just use that green line if it's available. There's other ways. If the time comes, I will show you my other trading methods. So right now you see I get a message on my iPad that I didn't see on my cell phone at the time. But I'm looking at VTI. VTI is falling, so that's my confirmation that everything else is not everything, and it's not my confirmation, but that's my signal. That's my indication that the stocks might keep falling as well. So this is why I didn't immediately get out of my trade. You know what I'm saying? I'm just gonna be still skinned about it. Let's see here. Hey man. So now you see the go in action. Now usually I don't draw trend lines really for real, but if I gotta manage your money, then I'm gonna make sure I'm doing my best job. You feel me? So I put some trend lines on here because I can see. I don't need the trend lines to see that the trends no more. You feel what I'm saying? I can see the trends, so I just put the trend lines on there to make better, because it does help. First of all, it does help to draw a trend line, and I draw it out so the people who with me on the seminar can see. Okay, so I put it red because this is a downward trend. You want to we buy the dips and we sell the tips. So when the tip, you see the tips that's touching the red line, you will sell right there. You see what I'm saying? But that's if it respects this trend line. So I already got the put set up. I got the put set up. As you can see, I should have put a put at the top where it says 1980. That would have been a better opportunity for me. But you can't get 100% of the gains. You can't. It's hard to. It's not easy to do to get the full fledged 100% of it. Man, that's hard to do. But yeah, I'm sitting here. I'm watching it. You know, I know as long as it's not breaking above the trend line, that my put option is making me money. Why is that? Because the descending trend line, as long as it's descending and the stock is just touching that and going under that, then I know that the stock is falling in price and that my put option is gonna make money. So now my put option hasn't made no money. It's still at $93. I paid $93 for it. So it ain't made no money, but the stock has downward momentum. So it's just about patience. Okay? It's just about patience. Now this I put $93 down, right? This is the thing about it. Okay? Now I could put a stop loss on my play. I don't know if I did it on this one or not, but I could put a stop loss on my play, and if I put it down 10, like let's say I could put it down percentage wise, or I could put it to a certain dollar amount that I want. If it falls below this price, it'll sell me out of it without me having to be on the app or nothing. That's called a stop loss. You can do this on stocks and options. Okay. So right now I'm looking at Tesla to see, just looking at the other stocks. Tesla's blue, red, bloody. You know what I'm saying? I'll buy Tesla under 700. Okay, that's me. I'll buy it under 700. So today wouldn't be a buying day of Tesla for me, or a buying day of Apple. I own Apple at about I think it's at 128, cause it was at 125, but I was buying I was buying just dollar cost averaging, so it raised my price up a little bit, but there's no worries. There's no worries at all. No worries. So I'm just looking around for other stock, looking at them, just seeing what they're doing. So if I see this is dropping red, then Apple is like a index of its own. Okay, Apple could bring a market back, or it could drop a market, just from what Apple does. So this the options. As you see, I'm up 101. So I'm up $8 on my Neo. I could put a stop loss on it. I don't think I did. But as I was saying, this options, the options to me is like a game. It is a game for real. And the game, you have to play. In order to be successful, you have to do what was meant to be done inside of the game. For example, I'm gonna give you a broad example, because I can give you an even more detailed example of how to be successful in the game. You just have to play to what the game. It's hard to explain, but I know what I'm trying to say. But let me give you this broad example. Let's say I'm playing Mortal Kombat, the fighting game. Okay, in Mortal Kombat, you're not just gonna see somebody have a Lamborghini and drive through the whole map and drive all on the dirt road and do all this stuff. You're not gonna see that, because that's not inside the parameters of the Mortal Kombat game. Okay, so that's never going to happen. So you have to play inside the game's parameters, or the limits, that the walls that the game was built around. Built inside. You have to play inside those walls. You feel me? Because if you try to play outside of what was successful, you're not 9 times out of 10 you're not gonna be successful. Your best success comes from doing what was already done that's successful. Okay, so that's about it for this clip. You see I'm up, but I didn't realize that whole 109. I think I made 99. I think I sold it at 90. I sold it at 99. Because I had a stop loss on it at 102, because I thought it was going to keep running. Then you look at Neo. Look at how far it came away from that trend line. That's a beautiful sight to see when you got a put option. I promise you it is. You see the green line? How it's under the green $9 moving average? That's beautiful. I can use that moving average for the rest of the day, just because it's under there. Hey, man. So now you see Neo break that trend line, broke through it. Okay, now I'm not frightened by this. Okay, I have my stop loss. There ain't nothing to be worried about. Okay, now you see that green trend line, see how it's moving upwards. So I can use the green trend. I can use it no matter if the stock is below it or above it. The green trend line is my $9 moving average. I don't know if I said this in my previous clip, but the moving averages, if it's a 9-day moving averages, that just means, because at first I didn't know what this meant. I just knew that the 9. I use the 9, but it's 10. The 9 is a little faster. It goes. The ones you should use are 10, 20, 50, 200. Or you could just use 20, 50, 200. But I put all 4 on there. I never used the 20. So I probably shouldn't say you use the 20. But I never use the 20 for real. I just keep it up there just to have something for my eyes to look at. But the moving averages, that just means over the last 9. So the 9-day moving average just means over the last 9 days, this is the average of the last 9 days prices, the closing prices that they were at. Okay, so that's all it means. So if a stock closed at 10, then it closed at 11, then it closed at 10 again, excuse me, and it did that for 9 days, you'll total up that, you'll add them all together and then divide that by 9, and that's your moving average. Okay, so now what am I still on that put? Yes, you see I'm up on the put, $15. I didn't realize all of that money. You see my cash balance. Okay, I have buying power. You see the cash balance is $900. So I can spend $90 on the put. That's only 10%. Really, that's only 10% of my buying power. That's 5% of my portfolio. Okay, because my buying power and my stocks they're half and half. They're equal to each other now. It wasn't like that before. All the profits I made off my options now, and I put some money in there. I just put some money in there yesterday. So all of that, you know what I'm saying, all the profits from my options, that's what made my account grow and grow and grow. And now my buying power is the same amount as my as with my stocks, how much market value of my stocks that I have. Okay, so when you add those together, then you get my total. I think it's my total market value. Excuse me if my terminology is messed up, but I hope you get the point that I'm trying to say. I have half in stocks and half in buying power, and when you add those together, that gives you my total market value. I believe that's what the term is. Okay, so I got that way from doing options and winning on options. So what are we looking at here? We're looking at it trading above the green line, and I wish that my Zoom my live recording would have captured not my live recording, but my screen recording would have captured the audio. I need to figure out how to do that. Hopefully, I figure it out for this next Zoom meeting. But you see me now. I'm looking at the ETFs. I see they're going up. Okay, I see that one going up. I'm like, oh snap, oh snap. I go straight to Neo. Oh snap. And I see a trend right there. You feel me? You feel me? I see a little trend right there. Let's see if it's where I draw the line at. Let's see. But you see the Bollinger Bands. I don't know if I said this in my previous clip, but the Bollinger Band is based on volatility. It's based on volatility, and it's based on standard deviations. If you remember that word from mathematics, sometimes I have trouble remembering that word, but I know what a standard deviation is. Okay, so the Bollinger Bands are useful. I use them. They're not always 100% accurate, but they do give you it's a great indicator. Okay, so it didn't touch the Bollinger Band, but you see it touched the VWAP. The VWAP, that white line, that is, I forgot exactly what it is, but as long as the stock is under the VWAP, that means it's good. It's a good time. It's alright to buy it. If it's above the VWAP line, that white line that says 1925, then it's not a good price to buy that. It's a little high. Okay, that's a good rule of thumb. I keep my VWAP on. I don't. It's great to use. Actually, I remember the last time I used it. I remember the last time I used it. It's a great thing to have. You know what I'm saying? It's a good indicator to have. These indicators, though, they're not the end all be all. Okay, you still have to keep your eye on everything, and you still have to respect everything that's going on inside the market. But the indicator just gives you a little more insight. Okay. So, let's see what else. Let's see what's going on. Because I know I draw a trend line. I know I did. Oh, here it comes. You see the golden action some more, man. I told you I don't usually draw trend lines because I can see the trends. But I'm drawing if I have to manage somebody else's money, I'm not gonna play with their money. You see what I'm saying? I'm not going. I have to make the right decisions. The best decisions. Okay, so I put the trend line down because it gives you a more accurate look of what's going on and everything. So if you're in my seminar, I'm gonna have to use the trend lines because I don't want you to lose no money. I don't want you to lose no money. I don't want to lose no. I'm a risk taker. Okay, I take risk, but I know I do that. I do that on purpose. I know how to. You feel me? I know how to get money off this. But I know how to take risks too. You see what I'm saying? If I got the capital, I can do that. But I would never risk your money. All right? I wouldn't do that. And if I did, I would tell you, like, oh, this is a lotto option. Because, a lotto, you pay $1 for it. And you're probably not going to win nothing or something. I'll tell you, like, this is a lotto or this is a risky option. Or I will let you know that before I tell you. I wouldn't tell you. Nothing I say is confirmation for you to buy, sell, or hold. It's just insight. It's just a perspective. Okay? But I have a good perspective. I believe I do. It's at the top of that Bollinger Band. Let's see what happens. Okay? See how it's dropping, it's getting some red. Now, the same thing I see is what other people see. That's why the market, it has to have these patterns, because it's not just me looking at the market. It's everyone else who's looking at it. They probably put a trend line up. They're looking at the Bollinger Bands. They're looking at the MAs. They're looking at the RSI. They're looking at the MACD. They know what's going on. Then you have people who have buy orders set that go off when, let's say, you get to a round number like 20 or $20.50. You have to be aware of all this stuff to be able to, you feel me, to be able to market. It's everyone else who's looking at it. They probably put a trend line up. They're looking at the Bollinger Bands. They're looking at the MAs. They're looking at the RSI. They're looking at the MACD. They know what's going on. Then you have people who have buy orders set that go off when, let's say, you get to a round number like 20 or $20.50. You have to be aware of all this stuff to be able to, you feel me, to be able to maneuver through this market. Okay? You have to be aware. What's going on here? So we getting some downwards action. Now I know I bought a put. I did 3 trades today. I bought a put that went up a lot. I didn't capture all the gains. I put a stop loss on it and didn't capture all the gains. I bought a call that lost me a few dollars. I put up $93 to risk a few. Boo hoo. So what? I could have lost $93. Okay, it's about risk management. It's about risk management. It's about winning more than you lose. So that's the time I'm on. You feel me? That's the type of time I'm on. So I know I did 3 trades. I profited on 2, so I made a profit today. You know what I'm saying? The Zoom meeting only $5 to get into, unless you paid for the Discord. Okay? Unless you pay for the Discord, then you get the Zoom meeting for free. This Zoom meeting, the Monday Zoom meeting, you will get for free. Okay? For sure. I'm just using that green trend line. I'm using the moving average and the trend line I drew. All right? I'm like that with this. I'm like that. This is the last clip, man. First we start out with the gas prices. Gas through the roof, man. You see it, $10 a gallon in California. And I live in Illinois. It's about $5 here. But man, I remember like last year it was like $3. I don't remember, man. Things just getting crazy out here. Absolutely crazy. Now we got, while I was at the bank, I asked the dude who was helping me, does he invest? He said he invests into his 401k. He gonna need another pillar of wealth, because if we go into a recession, that 401k gonna turn into where my money. And this is for real. Nah, I know for a fact that when the economy comes down or anything, the 401ks come down as well, for sure. How those gonna stay up and everything else falling. He gonna need another pillar of wealth. He gonna have the 4 pillars of wealth that I know there is: stocks, real estate, business, and I can't remember the 4th one. I read this post the other day, and it says Metaverse could contribute $3 trillion to global GDP within 10 years. And like an hour or two after I read it, and I'm like, wow. I had this thought. I said, I know everyone wants the economy to be great, but we have to face the facts. The value of the dollar is becoming weak compared to the cost of goods and services. I'm gonna just let it go through so y'all can read it, so it can get in y'all head. Ain't no shame. My game. Yeah, it's pretty long, ain't it? Hmm. The economy isn't looking so great right now, and there's a chance of a recession coming. Don't be scared when I say this, please. You'll still be alive when it's said and done. During a recession, people still have to pay their bills, right? This recession ain't going to be like the Great Recession. Our technology is way more advanced. People are going to still watch TV and play video games. So the last recession was during the industrial age. They was doing all the machinery stuff and all the oil. We're in the information age now. I said, this idea is so beautiful to me. The metaverse is a virtual world where only your imagination limits you. Do you think the virtual world would be affected by the real world? I believe the metaverse will thrive during a recession due to it being virtual and a collaborative potential. Now, that's just my insight. That's what I think the metaverse got going on for it. That's my prediction. You see, I get a freestyle. Make sure y'all use my link. I got Robinhood, Webull, Coinbase, and BlockFi. Now, this says, is Bitcoin mining about to be banned in New York? Now, Bitcoin, it says that, I can't really read it right now, but it basically, that this article, I remember it was basically said that dirty energy, and because Bitcoin, it takes a lot of energy, and the energy is not the cleanest, it's not the most environment friendly. So they're saying that they're banning the dirty part. So if they can find a way to mine Bitcoin without it being so nasty to the environment, then they're not going to ban it. But right now they want to ban it because of that fact. That's what it says in this post. And I believe that's it for the news, man. Make sure y'all like, comment, subscribe, man. This is my first SNR seminar, man. That shit sound cold as hell. SNR, this is my first SNR seminar, man. It's gonna get better and better, more things to come, all that, you know what I'm saying? I really appreciate everybody who came and supported and who watched the video all the way. Please leave a like, man. I really appreciate it. And please join the Discord, man. It's some of the best information in there, some of the best information on my Facebook, my TikTok, my Instagram.